And welcome to another video by reitspro.com. I'm Gaurav Jain and I'm bringing this video today. We bring our videos every alternate Thursday. We thought it's better to bring this one now, which is about Bharat Highway InvIT. So this IPO is coming out right now in the last week of February. And we have two parts of this video. The first part being the general one where we talk about the Bharat Highway InvIT, which is there evidently from a lot of sites you'll be able to see, but that's just a recap. The second part is the unique part where we talk about the HAM, which is what is it, what to expect. That's the asset level understanding of the entire project. So do watch till the end. What is an InvIT? Let's just clarify that first. And InvIT are just stocks. InvITs are just stocks to get great stable cash flows periodically, because these are infrastructure investment trusts which invest in transport, logistics, energy, and so on as per the harmonized master list. Now, Bharat Public InvIT is a public InvIT, and that can be listed on the NSE and BSE where retail investment is possible. So you, as a retail investor, one can participate in the IPO as well as in future trading of the units of Bharat InvIT. Just to summarize, report gives the basics of the issue, and you can pause here and see what it is about. The structure of the InvIT is as displayed. This is from their website, their official website. And if you see on the left-hand side, you will see the sponsor and project manager and investment manager. And right side, 85% will be held by public. And IDBI is the trustee. And these are the 7 assets that Bharat Highways InvIT has. So the first thing is that it is the sponsor and investment manager are Adharshila Infratech Private Limited and GR Highways Investment Private Limited. So this is a lot of times, a lot of people feel that Bharat is something related to the government, a government entity, which it is not. It's just an arrangement with the NHAI that makes things, the cash flows in the InvIT possible, which we'll just see over the next few slides. So the NAV and discount to NAV and comparison is given as here. If you see the NAV as on 30th September 2030 was 122.18 rupees. And the NAV of a comparable one is the IRB InvIT, because the IRB InvIT is also into roads. Their model is, however, a little different, but the same fund is trading at 30% discount approximately. The issue amount and the use of the proceeds is here. So rupees 2,500 crores is the total amount, out of which the sponsor would put in 664 crores, and the net issue is 1835 crore rupees. And the issue amount would be used like this. So it'll be the total debt in the InvIT right now is 3527 crores. So there'll be 2,500 crores would be used to pay up this repayment of SPV level debt, and the debt at InvIT level remains at about 1127 crores. So the yield estimates by management which have come initially are approximately 11%, which they say is somewhere between the debt returns that an investor get, which is about 7 to 8%, and equity would be about 14 to 15%. Assuming that equity gives 14 to 50%, we would say that it lies somewhere between the two spectrums, the debt and equity spectrum. However, what we really need to focus is on the assets and how the project works, the projects work underlying the InvIT. So there are 7 HAM projects, and HAM stands for hybrid annuity model. What is that model? That we'll just see, but the SPVs and the assets are given in a snapshot here. So you can pause and see the various assets that the InvIT has. So the basis of returns in our case is the HAM model, and we need to get a more insightful understanding of what a HAM model is. This is the construction period. If you see on the left-hand side is the construction period, and then there is an operations period. So in the construction period, what happens is that the 40% of the project cost is borne by the government, and 60% is by the concessionaire. So in this case, say before the InvIT, of course, there'll be a development agency, which would be different, and the project would then get transferred into the InvIT. So here, the sponsors would be bearing the 60% of the cost of the project, and thereafter, during the operations period, the government would be the entity which would collect the tolls. The NHI would collect the tolls, and operations and maintenance would be borne by the concessionaire, and the annuity payments and O&M payments would accrue to the concessionaire from the government, along with interest payments on reducing balance at bank rate plus 3%. So these are the kind of flows that one can expect in a hybrid annuity project. And if you go to the prospectus, this supports the same thing here. In the prospectus of the Bharat InvIT, here an NHI is required to pay interest on the reducing balance of the completion cost equivalent to 60% of the BPC throughout the operation period at the rate of 3% above the RBI mark, bank rate. So, and there is one more thing that you could notice there, that it says that while the O&M income is linked to inflation, there can be no assurance that O&M income will sufficiently offset or increased O&M cost. This is what the IPO prospectus says. So these are the three flows. If I go back again, the annuity payments, O&M payments, and interest payments that accrue to the InvIT, in our case, in the operations period, which is post the construction period, which is how InvITs are formed post the construction period. So the Bharat Highway InvIT, if you compare to debt, would it be justified? Because what is going to happen is that if you see after the concession period, the assets would go back to the government. So what will happen to the existing assets? What will happen to the existing units? That is what is to be explored. So what really happens is that after these n number of years, which are in our cases around 12 years, the asset would go back and the cash flows would cease. Now, how to get the cash flows back is something that the InvIT works on. So the InvIT naturally acquires more assets. So one way is the ROFO. You would have heard about the ROFO, the right of first offer, and also from outside. So ROFO is from somebody they've agreed with at the time of the IPO that they would acquire the assets from that entity. In our case, it is GR Infra. So the ROFO proposal is with GR Infra Projects Limited, and they have 23 projects in their pipeline. And how do the funds accrue for increasing the asset base? So we've just talked about earlier on another slide that the debt is 3527, out of which 2400 crores from this issue is going to be used. So there would be a remaining debt of about 1100 crore rupees. So if you see the current situation, this is about 20% of the enterprise value. So if the enterprise value is around 5500 crore, then post issue we have a 1100 crore debt. Then the second stage comes when there is a ceiling of 49% as per SEBI guidelines, which is hit. So you could raise about 29% of the enterprise value as far as loans are concerned. So 1100 plus 3000, I'm just giving approximations here, is 4500 crores, which is approximately 49% of 8500 crores. So 8500 crores becomes like this. So 5,500 plus 3,000 crores, which is the debt part, makes the enterprise value as 8,500 crores. And the third and the final stage before they start raising equity also, and this is just with debt, is when they hit the ceiling of 70%. So let's say an approximate 63%, which is approximate level of the Indigrid InvIT today, which is the highest among the InvITs. So you have about 7,600 crore rupees of debt, which is about 63% of the enterprise value of 12,000 crores. So they have a room of about 7,000 odd crores after today's issue also to take debt and take assets. Now, in this case, if we have, we hit the ceiling of 49%, after which 70% ceiling is there with certain conditions. At the second level, they would need to bring in this capital and be able to acquire about 6-7% GMR or other assets. After this, they would need to increase the equity base post this limit. So before I go on further, do like and subscribe to our videos, and there's a WhatsApp group also which you can join. So do subscribe and like the video. That gives us a lot of encouragement. So summarily, we need to assess the following. First part is that the revenues are not linked to tolls. So the traffic and toll collection is handled by the government. The second part is that the fixed return on principal is there. So the return of principal is there, plus there is something like a floating interest on the balance. That is the balance amount that remains out of the 60% which the developer has pumped in initially. The scope happens to come from spreads from debt when new assets are acquired. Secondly, they have to be value accretive asset acquisitions. And thirdly, if there is a fall in interest rate, that definitely gives a lot of impetus to the whole asset price of an InvIT. So thank you so much for watching the video. Do like, subscribe, and stay connected. Thank you.